Welcome back, YouTube. So as we talked about earlier today, we know that inflation came in at around 9.1%. This is the highest number of inflation since 1981. We're going to pick out some highlights here, and then we're also going to talk about how this is going to affect your investments going forward, and ultimately what kind of year we're going to have for the remainder of 5 months or so. So if we look here, you'll see that excluding food and energy prices, so-called core CPI is 5.9%. Well, actually, I'm going to start here. The Consumer Price Index, a broad measure of everyday goods and services related to the cost of living, soared 9.1% from a year ago, above the 8.8% Dow Jones estimate. This is the 1981 highlight that I just mentioned. It says so-called CPI increased, core CPI increased 5.9% compared to the 5.7% estimate. Core inflation peaked at 6.5% in March and began nudging down since. On a monthly basis, headline CPI rose 1.3 and core CPI up 0.7 compared to the respective estimates of 1.1 and 0.5. So pretty much across the board, inflation has beat all of the estimates from analysts, top analysts, Dow Jones, and stuff like that. So yet again, despite the more aggressive rate hikes and stuff like that, inflation is still out of control. This is not good for market sentiment, for confidence in the market, for investments. This is why I was telling you, when you look at you get different information and stuff out there, you see that they're like, oh, we've bottomed out. It's off to the races now, to the moon and stuff like that. You have to watch the macros. The macros will give you clues as far as to where the market is going. These are not good macros here. This type of macro, again, this means that the Fed has been behind inflation all year long, and we're going into month 8, and they're still behind on inflation, and that the basis point hikes have not had an effect yet. And primarily, they've been printing money as late as May, still buying, injecting mortgage-backed securities into the market. So as far as for confidence in the market and investing, this is going to, we've already seen the market, we've seen crypto get gutted, we've seen the amount of money leave out of the stock market, we're seeing the rates hike up in real estate and stuff like that. Pretty much as money gets more expensive, the rates in real estate are going to continue going up. As long as we have month over month inflation rising like this, you're not going to see confidence from retailers nor institutions to enter into the market, because no one wants to be in this situation here until you have some evidence of a reversal, so that you can kind of say, okay, well, this is kind of bottoming out and I don't mind holding on because we have evidence of a reversal. If this was the case, if you had invested 3 months ago, this would be terrible news. This is, and I'm not saying to try and time the market, but just also if you look at historically what a correction is and stuff like that, typically people get cash heavy, and that's when they're trying to get the better deals, or they move their money around to try and tolerate risk. And this is why we have the inverted yield curve for the 3rd time this year. That's also another indicator that this was going to happen, right? So as we look at the crypto market, stock market, and stuff like that, and real estate, the macros that we're going to use for here, we look at them month over month, and we say, okay, so what do we do as investors? And the best thing that I have is, if you are long-term, and this is going to weigh the most, if you're going to say, if you have like a 5-year approach, or if there's something you're not looking to do like a quick flip on, or you're not depending on when the next bull run happens to turn a profit, this is going to be the time you can definitely start dollar cost averaging in. This is not trying to time the market. This is not saying that things can't get lower, or that they're not going to miss the mark in August. There certainly seems to be a pattern here. I do believe that we're eventually going to get a full point basis hike. So a full point, maybe even, I think they're trying to broker it and maybe even do a couple points, but that's to be discussed in like a later video as those discussions happen. But as of right now, dollar cost averaging into the market is going to be the best bet, because ultimately, when the market does recover, when we do get that evidence of reversal, it's going to come down to share count, coin count, stuff like that. That's going to be your multiplier going forward. So not trying to time the market and say, oh, well, next month we'll be double digits and stuff like that, and I can get an even better deal because of the fear in the market. Coin count is going to matter. If you have a large sum of money, the best thing you can do is just not go all in and just say, okay, well, I'm going to wait out. You can probably get better entries, especially now, since we're going up so high. Even on the way down, you can still get some of those entries. And by just spreading out your and allocating your investments across the coins, the stocks that you're bullish in, and get a really great price as far as for the average during this downtime, right? So when we look at how long this is going to take, we know that historically the period for, especially in crypto, you're going to look at the fact that Bitcoin typically bottoms out around 11 to 14 months after an all-time high. That's going to be October, November this year. This here is certainly not helping, but it ultimately, we're going to see if this is going to affect the cycle or not. We know as of last year, we're coming off of the shortest bear market in history, but technically for the window in crypto, we have not surpassed that window where we should see like a sideways trend or something like that, or a consolidation point where we have evidence that, okay, during this time frame, we've bottomed out. So this does leave room for Bitcoin to further consolidate, and that's normal. That's normal. Bitcoin is consolidated. I think the most is around 86%. That's where you're seeing all these $10,000 numbers from. And there's a few indicators that can confirm that that's entirely possible. Other coins have consolidated a lot faster, so you may not see a sharp decline from their current positions. That's fine as well, depending on which coins you're looking at. I think any of the coins in the top 10, whether that's Bitcoin, Ethereum, Cardano, Doge, any of the coins that I hold, I think the prices where are at now, despite if we get a breakdown lower, I think all of those are great entries. I think this is a great time to take positions in those coins. And I'm not a fan of trying to time the market or nobody can anticipate when the Fed is going to get things under control. So I'm certainly not a fan of trying to do that, but I do think that all of these are great entries. So coming in here, looking at these numbers, seeing that we missed the mark yet again, this is just literally allowing you more time to get your stuff together, get into your positions, get into positions that you want to be in for the next bull run, and just pretty much capitalize off of your coin count, right? So we're due for the next bull run. Historically, chart-wise, we're due for that in 2024. The end of 2023, roughly, Bitcoin likes to run in December. So technically, you'll see that ascend start for Bitcoin, and of course, the rest of the crypto market kind of follows. But technically, Bitcoin does that, I think, like the week before Christmas, if we're looking historically. Now, I'm not sure how these record numbers that we're having since 1981 was certainly a long time before crypto came about. So I'm not sure what the effect of these macros, if they're going to kind of affect the time frames or the cycles. This is certainly going to be interesting and a great data point going forward. But historically, based off of what we do know, those are the facts. So that's kind of like what I'm looking for here is a coin count and stuff like that. And I do not expect them to have inflation under control by next month. And the thing that I'm looking for now, if I had to make a assumption or prediction or whatever, I'm expecting them to get even more aggressive with the rate hikes. I'm expecting them to probably go toward a full point, if not even higher, because what we're looking at here, this is going to be detrimental for the economy, especially if this is going forward. This can take a lot to get these numbers down and a long time to get these numbers down, because we haven't even with the more aggressive rate hikes and 0.25 to 0.50 to 0.75, we have zero evidence of a reversal, zero. So even the time frame that's going to take to even get us down to like a 2 or 3%, something like that, is not even factored in yet. We have zero evidence. So this is going to be just a journey here for all of us. And I think that the best thing that we can do, if it's the positions that you're bullish on, is to absolutely take the time to decide on how many your coin count, your share count, and take your positions on those assets. So hope this video finds you well. Subscribe to the channel if you want to hear more. We're going to be breaking down the inflation rates going forward. Stocks, we're going to go into like what I'm doing, the positions and stuff that I'm taking this week. So if you found any value in the video, subscribe to the channel. And also, if you don't want your stocks lended, I have a link for Moomoo in the description. And definitely the best thing that you can do to secure your coins and to make sure that they're not getting lent out, or that your exchange isn't going to file for bankruptcy and take your coins with them, is to get a ledger. That's what I use. There are other wallets out there. You have like Trust Wallet and stuff like that. I believe cold storage is the best. I use Ledger. I have an affiliate link in the description that will take you directly to the manufacturer's website. And you can get your ledger without any malware or BS in there and worry about someone stealing your coin. So thank you all. I would appreciate you if you guys leave a like on the video, and I will see you guys tomorrow. Have a good night.